Welcome back to Investing Talk. Today, we're going to be looking at the solar energy landscape,
Okay.
specifically SolarEdge Technologies,
Right.
ticker symbol SEDG. And, some of you might be thinking,
Yeah.
solar energy in 2025, what's the big deal?
Right.
Well, it's an industry that's undergoing some serious shifts, and SolarEdge is right in the thick of it.
Yeah, you're absolutely right. We're seeing some, fascinating dynamics. The stock market, overall is feeling pretty good. Low unemployment,
Right?
strong housing market.
Yeah.
Things are looking up. But for SolarEdge, the story is a little more complex.
Okay.
Their stock price is down about 70% over the last year.
Okay, so help me understand this. What's dragging SolarEdge down when the rest of the market seems to be doing so well?
Well, I think, for starters, high interest rates are making it really difficult for people to finance solar installation.
Mm-hmm.
And that directly hits SolarEdge's sales
Right.
and has created this, huge inventory backlog, something that they don't expect to clear until the end of 2024.
So it's like a ripple effect. The economy's doing well, but these high interest rates are making it hard for folks to jump on that solar bandwagon, which is impacting companies like SolarEdge.
Yeah, absolutely.
But haven't they been taking steps to adjust to this new reality?
Absolutely. They're not just sitting back, right?
Right.
They've made some tough decisions, laying off 16% of their workforce globally,
Wow.
shutting down manufacturing in Mexico,
Okay.
and scaling back in China.
Wow, those are some serious moves. It sounds like they're really trying to batten down the hatches and ride out this storm.
Yeah.
But what about their recent performance? Didn't they just beat revenue expectations?
They did. They
Wow.
pulled in $196.2 million in
Wow.
the fourth quarter of 2024, exceeding the estimate of $188.7 million.
Okay.
That has to be a good sign, right?
Right.
But there's a catch. It's still a 17% drop from the previous quarter.
So a win, but maybe not a cause for celebration just yet.
Right.
What about their profitability? Where do things stand there?
That's where things get a little tricky.
Okay.
They posted a bigger than expected loss per share for the fourth quarter,
Right.
a hefty $3.52.
$3.52.
Yeah.
So we've got mixed signals here. They beat revenue expectations.
Right.
But profitability took a hit and their stock price is down. Where is SolarEdge's stock currently trading?
As of February 18th, it was at $16.89.
Okay.
It's been on a bit of a roller coaster this past year.
Yeah.
Analyst opinions are all over the place, too.
Right.
The average price target is $25.16.
Okay.
But some analysts are predicting it could drop even further down to $14.33.
Wow, that's quite a range. What's created all this uncertainty among the analysts?
Well, there are a few key factors at play here.
Yeah.
First, can SolarEdge actually manage this inventory surplus and clear that backlog?
Right.
Second, can they reach their revenue goals and boost their profitability?
Okay.
And finally, and this is a big one, will interest rates eventually come down?
Right.
That would give the entire solar industry a much-needed lift.
So a lot of ifs for potential investors to consider. It sounds like betting on SolarEdge right now is a gamble. Are there any bright spots, anything that makes them an attractive investment?
There are a couple of things. Their price-to-book ratio is a low 0.59.
Okay.
This basically means that the stock might actually be undervalued by the market.
Right.
And here's another interesting point. Their CEO believes that the European residential solar market is about to hit its lowest point,
Okay.
which could set the stage for future growth.
So some glimmers of hope amidst the challenges. What about their guidance for the future? Are they projecting a comeback?
They're projecting revenue between $195 million and $215 million for the first quarter of 2025.
Okay.
That's a little shy of the $207.9 million analysts were expecting.
Yeah.
But it does show they're aiming for a rebound.
Okay.
They're also predicting a gross margin between 6% and 10%,
Okay.
which indicates a focus on improving their profitability.
Okay. So ambitious goals, but a lot of work ahead.
Yeah.
It sounds like SolarEdge's success hinges on them executing their turnaround plan flawlessly.
Right.
But let's take a step back for a second. How does the bigger economic picture play into all of this?
That's a great point. It's important to remember that SolarEdge isn't operating in a vacuum, right?
Right.
The entire solar energy sector is influenced by everything from government policies and regulations to advancements in technology and, of course, consumer demand.
Right. And we can't forget about the overall economy. As we mentioned, the S&P 500,
Right.
that's SP 500, is doing well thanks to strong economic indicators.
Yeah.
But how does that positive energy translate to the solar industry?
That's a key question. While a strong economy usually means more spending and investment,
Yeah.
The solar sector is a bit unique.
Okay.
Those high interest rates we've been talking about
Right.
are actually putting the brakes on solar investments,
Wow.
even with the overall economic growth.
So it's almost a paradox.
Yeah.
Strong economy, but those high interest rates are creating a barrier for solar adoption. That's definitely something to think about. What does all this mean for SolarEdge's long-term prospects?
Well, predicting the future is never easy, right?
Right.
It's tough to say for sure how all these factors will play out in the long run.
Yeah.
But there are some key trends to watch out for
Yeah.
that could give us some clues.
All right, let's talk about those trends. What should investors be paying attention to when trying to evaluate SolarEdge's future potential?
One major trend is the global push towards renewable energy.
Okay.
Governments worldwide are setting ambitious targets to reduce carbon emissions and shift to cleaner sources of energy.
Mm-hmm.
This creates a favorable long-term outlook for the solar industry as a whole.
That makes perfect sense. The demand for clean energy is only going to increase, and that should benefit companies like SolarEdge. What else is on the horizon?
Another trend is the decreasing cost of solar technology.
Okay.
As solar panels and other components become more efficient and cheaper to manufacture,
Mm-hmm.
solar energy becomes more affordable for consumers and businesses alike.
So declining costs paired with increasing demand. That sounds like a potentially powerful recipe for SolarEdge's future growth. But what about their competition? How do they stack up against other players in the solar market?
Competition is a critical factor, right?
Right.
The solar industry is getting more crowded every day,
Yeah.
with both established companies and newcomers all vying for market share.
Mm-hmm.
To stay on top, SolarEdge needs to keep innovating
Right.
and developing cutting-edge products that keep them ahead of the pack.
Staying innovative is key for their long-term success. What are some of the ways they're innovating right now?
One of their flagship products is their power optimizers,
Okay.
which maximize the energy output from individual solar panels.
Okay.
They're also investing heavily in smart energy management systems,
Mm-hmm.
giving homeowners and businesses more control over their energy usage.
Right.
And they're expanding into new areas like electric vehicle charging and energy storage solutions.
So a multi-pronged approach to innovation. They're not just relying on their existing products, but looking for ways to expand into new and exciting areas of the energy market.
Exactly. That kind of forward thinking is crucial
Yeah.
for any company in a fast-paced industry like solar energy.
Okay, so we've covered a lot of ground here. SolarEdge's recent performance, their challenges, their future outlook, and the wider context of the market. What are your final thoughts on SolarEdge as an investment opportunity?
Well, it's a company with huge potential, but there are definitely some headwinds to consider.
Yeah.
The high interest rates, that inventory backlog,
Right.
and the fierce competition all pose challenges. But on the flip side, their commitment to innovation, expanding into new markets, and the long-term growth of the solar industry
Yeah.
make them a compelling prospect for investors who are willing to take on a little risk.
So a high-risk, high-reward scenario, investing in SolarEdge seems like it requires careful consideration and a close watch on how they handle these challenges in the months and years ahead.
Absolutely. Due diligence and a solid understanding of the company's financials,
Yeah.
their strategy, and the broader market dynamics are essential before making any investment decisions.
Great advice. Always do your research and invest wisely.
Yeah. Welcome back to Investing Talk. You are with us as we continue our look at SolarEdge Technologies.
That's right. We've covered a lot of ground so far, but now it's time to roll up our sleeves and dive into the numbers, really get a sense of SolarEdge's financial health.
Yeah, let's revisit their latest earnings report for the fourth quarter of 2024. They beat revenue expectations, bringing in $196.2 million. But as we discussed, their profitability wasn't as impressive.
Right.
They had a larger than expected loss per share of $3.52.
Yes, that loss per share definitely raises some eyebrows. But they did exceed those revenue projections. What factors contributed to that?
Well, it appears to be a combination of things. Despite the tough market, they managed to ship a considerable volume of their products during the quarter. That's 895 megawatts AC of inverters and 130 megawatt hours of batteries.
So strong sales volume helped them hit those revenue numbers. But what about their margins? We touched on this earlier, but it's worth exploring further. They reported an adjusted gross margin of negative 39.5% for the fourth quarter, which, while better than the previous quarter, is still a pretty substantial negative figure.
That's right. The negative gross margin really highlights the pressure they're facing from rising costs and the need to offer discounts to stay competitive.
So they're selling at a loss just to maintain market share. That's not exactly a recipe for long-term success. What are they doing to address this margin pressure?
Well, they've implemented those cost-cutting measures we discussed earlier, laying off 16% of their global workforce, closing their manufacturing facility in Mexico, and reducing capacity in China. These are all about making their operations leaner and more efficient.
Those are tough choices, but they demonstrate how serious the situation is. They're clearly focused on getting those costs under control and becoming profitable again. But cost-cutting alone won't be enough. They also need to focus on growing their revenue.
Absolutely. And they've set some ambitious revenue targets for the coming quarters. They're aiming for between $195 million and $215 million in the first quarter of 2025.
Those targets are a bit below what analysts were expecting, but they still represent a significant rebound. What's their strategy for achieving this growth?
Their growth strategy relies on a few key factors. First, they're banking on a recovery in the residential solar market, particularly in Europe. Their CEO believes the European market will bottom out in the first quarter, which could drive increased demand for their products.
So they're counting on a European rebound to boost sales. What about the U.S. market?
The U.S. market is a little more complex. They recognize that the U.S. residential solar market is likely to remain sluggish until interest rates come down. But they're still focused on holding onto their market share and taking advantage of any opportunities that pop up.
It sounds like they're being cautious about the U.S. market, which is understandable given the uncertainty. But Europe seems to be their main focus for growth in the short term.
That's right. They're also exploring new avenues for growth, like electric vehicle charging and energy storage solutions. These emerging markets have a lot of potential for SolarEdge to diversify its revenue streams and become less reliant on the residential solar market.
So they're not putting all their eggs in one basket. They're strategically branching out into new areas that are aligned with the bigger trends in the energy industry.
Exactly. It shows they're adaptable and forward-thinking. They're not content with just being a solar company. They're positioning themselves as a comprehensive energy solutions provider.
Okay, we've covered their revenue projections and growth strategy. Now let's talk about their balance sheet and overall financial health. How would you describe their financial position?
Well, they currently have a market capitalization of $1.32 billion. Their price-to-book multiple is 0.59, which hints that the stock might be undervalued.
That's interesting. A low price-to-book ratio could be a good sign for investors looking for value. But we need to consider the whole picture. What about their debt levels and cash flow?
They haven't released detailed information on their debt levels for the most recent quarter. However, we do know that they're projecting to be cash flow positive in the first half of 2025. This is a major milestone because it shows they can generate cash from their operations.
Positive cash flow is always a positive indicator. It gives them more financial flexibility to invest in growth, pay down debt, or return value to shareholders. What about their profitability overall? We know they posted a loss in the fourth quarter. But what's the long-term outlook?
Analysts have mixed opinions about their long-term profitability. Some are confident they'll turn things around and achieve consistent profitability as they work through their inventory, reduce costs, and benefit from a rebound in the solar market.
So there's some optimism, but also some uncertainty surrounding their ability to become sustainably profitable. What are the key factors that will determine their success in that area?
It boils down to execution. Can they effectively manage their inventory levels? Can they maintain pricing power in a competitive market? Can they control costs while still investing in innovation and growth? These are all critical questions that will shape their path to profitability.
It's a delicate balancing act. They need to be financially responsible while also making strategic investments to set themselves up for long-term success. What's your overall assessment of SolarEdge's financial position?
It's a mixed bag. They have a strong position in the market and a well-known brand, but they're also facing some significant financial hurdles. Their ability to overcome these hurdles and successfully implement their turnaround strategy will ultimately determine their future success.
All right, we've explored SolarEdge's financials, covering revenue, margins, growth strategy, and overall financial health. Now let's move on to another important aspect of their investment profile, their valuation.
Welcome back to Investing Talk. You're with us as we wrap up our look at SolarEdge Technologies.
That's right. We've spent the last two parts of this episode taking a deep dive into SolarEdge,
Right.
ticker symbol SEDG.
Yeah.
We've discussed their recent performance, their financials, their growth strategy, and their valuation. And it's clear they're at a critical juncture.
Yeah, absolutely.
Absolutely, they have a lot of potential, but they're also facing some significant challenges.
Right.
So let's step back and look at the bigger picture. If you as an investor are feeling a little uncertain about SolarEdge,
Yeah.
what other investment opportunities might you be considering in this market?
Well, there are a few, interesting areas to explore.
Okay.
First, it's important to remember that the overall market sentiment is quite positive right now.
Right.
The S&P 500
SP 500.
is performing well.
Yeah, driven by factors like low unemployment and a strong housing market. So even though SolarEdge is facing headwinds, the broader market seems to be in good shape. That's encouraging for investors, isn't it?
Definitely. It means there are still plenty of opportunities out there to find solid returns. If we look at some of the top performers in the S&P 500, we see companies like Constellation Energy,
Okay.
ticker symbol CEG,
Okay.
CVS Health, and
GES,
GE Aerospace,
GE.
all posting strong gains.
So those sectors seem to be doing quite well. Are there any other specific areas that you're particularly interested in right now?
Well, one area that has been attracting attention is Japanese equities.
Okay.
The Japanese stock market has been performing well, and there's a sense that this positive momentum could continue.
That's interesting. What's driving this optimism around Japanese stocks?
Well, a few factors are contributing to this positive sentiment. Japan has a relatively stable economy,
Okay.
and their central bank has been implementing policies that support growth. Additionally, many Japanese companies are well positioned to benefit from global economic expansion.
So it's a combination of domestic stability and global opportunities. What about other international markets? Are there any particular regions or countries that you find promising at the moment?
Another area that investors are watching closely is Asian high yield, or AHY,
Okay.
and frontier market debt. These asset classes offer the potential for higher returns, but they also coming with higher risks.
High risk, high reward. It seems like that's a common thread in the world of investing. What are the key things for investors to keep in mind when considering these types of investments?
It's essential to thoroughly understand the specific risks involved.
Okay.
These markets can be more volatile and less liquid than developed markets.
Right.
Careful research and a well-diversified portfolio are crucial.
That's sound advice. Never put all your eggs in one basket, especially when dealing with higher risk assets. What about asset classes beyond stocks and bonds? Are there any alternative investments that you think are worth exploring?
Real estate investment trusts, or REITs, are another avenue that can provide diversification and the potential for attractive returns. REITs allow you to invest in real estate without having to directly own properties.
That's a great option for someone who wants exposure to real estate without the hassles of being a landlord. Are there any specific types of REITs that are performing particularly well right now?
REITs that focus on industrial properties and data centers have been in high demand,
Okay.
driven by the growth of e-commerce and cloud computing.
So those are some interesting trends within the REIT market. We've covered a lot of ground today. We started by examining SolarEdge Technologies, a company with potential but also facing some significant obstacles.
Absolutely.
Then we broadened our perspective to consider the overall market and highlighted some sectors and asset classes that are performing well and potentially offer attractive opportunities for you as investors.
Exactly.
Exactly. Investing is all about finding the right balance between risk and reward. There's no one-size-fits-all approach. The best strategy depends on your individual financial goals, your risk tolerance, and your time horizon.
That's right. It's important to conduct thorough research, stay informed, and, if needed, seek advice from qualified financial professionals.
Yeah.
Remember, investing is a long-term game. Stay focused on your goals and don't let the ups and downs of the market derail your plans.
That's excellent advice. As always, thanks for joining us on Investing Talk. We hope you found this in-depth look at SolarEdge and the broader investment landscape informative and helpful.
Don't forget to subscribe, share this episode with your friends and colleagues, and let us know what you think in the comments. Until next time, happy investing.